Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 17th, 2025, and we're diving into Snap-on's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Snap-on, a leader in tools and diagnostics, has just released their Q1 2025 results, and there's a lot to unpack, especially given the current economic climate.
Revenue and profitability overview. Let's start with the top line. Snap-on reported net sales of $1,141.1 million for the first quarter of 2025, which is a 3.5% decrease from last year. John, can you elaborate on this?
Absolutely. The decline in net sales is primarily due to a $27.3 million organic decrease and $13.9 million from unfavorable foreign currency translation. Despite this, Snap-on managed to improve its gross margin by 20 basis points to 50.7%, indicating effective cost management.
And what about their profitability?
Snap-on's operating earnings were $313.4 million, representing 25.2% of revenues. However, net earnings decreased to $240.5 million, or 4.51 per diluted share, compared to $263.5 million, or 4.91 per share, last year. This decline is partly due to the absence of a legal payment benefit that was present in 2024.
Segment performance. How did Snap-on's different segments perform this quarter?
The Commercial and Industrial Group saw sales of $343.9 million, down from $359.9 million last year, mainly due to reduced military sales. The Tools Group experienced a significant decline to $462.9 million from $500.1 million, driven by lower U.S. activity. On a positive note, the Repair Systems and Information Group increased sales to $475.9 million, thanks to higher OEM dealership activity.
And what about their financial services?
Financial services revenue increased to $102.1 million from $99.6 million last year, with operating earnings rising to $70.3 million. This segment continues to be a strong contributor to Snap-on's overall performance.
EPS forecast and market reaction. Analysts had forecasted an EPS of $4.81, but Snap-on reported an actual EPS of $4.51. How has the market reacted to this?
The market reaction has been mixed. While the EPS missed the forecast by 30 cents, the company's ability to maintain strong margins amidst economic uncertainty has been viewed positively by some investors. However, the overall sentiment is cautious given the missed expectations.
CEO's perspective and future outlook. What insights did CEO Nick Pinchuk provide regarding Snap-on's future?
Nick Pinchuk emphasized the company's resilience and strategic focus on local production. He highlighted Snap-on's structural advantages, such as their extensive U.S. manufacturing capacity, which positions them well to navigate current challenges. The company plans to invest approximately $100 million in 2025 to support growth initiatives.
And what about their tax outlook?
Snap-on anticipates a full-year effective income tax rate between 22% and 23%, consistent with their current rate, which should provide some stability in their financial planning.
Key takeaways. In summary, Snap-on's Q1 25 results reflect the challenges of the current economic environment, with a slight decline in sales and earnings. However, their strong gross margin and strategic investments indicate a focus on long-term growth. John, any final thoughts?
Snap-on's performance shows resilience, but the missed EPS forecast highlights the need for caution. Investors should watch how the company navigates economic uncertainties and leverages its strategic advantages.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Snap-on's performance in the comments below.